So the biggest factory on planet Earth just put a padlock on the employee exit and told the rest of the world that the silver isn't coming out to play anymore. I am kidding, but only barely, because while you were arguing about football or inflation prints over the weekend, China quietly finalized the paperwork that effectively nationalizes their silver supply without firing a single shot. They didn't seize the mines. They didn't send in the army. They didn't make a big speech at the UN. They just changed the export codes and turned the global supply chain into a permission slip system that nobody in the West has a pass for. It is the most polite rug pull in financial history. Exactly what happened is this. Effective immediately, China has implemented a strict export licensing regime for silver. They have slashed the list of approved exporters to a handful of state-controlled entities. We are talking about a whitelist of maybe 44 firms for the entire country. If you are not on the list, you do not ship. And even if you are on the list, you need a license for every shipment. This is not a ban in the headlines. The headlines will call it regulatory tightening. They will call it administrative adjustment. But in the plumbing of the market, it is a soft nationalization. It means the Chinese state now decides who gets silver and who doesn't. And guess what? Apple and Tesla and the US Mint are not at the front of that line. Now, quick favor before we go deeper into the mechanism, because the algorithm hates this kind of truth. I am running a campaign to push back against the copycat channels that steal this work and dilute the message with AI-generated nonsense. If you value what I do here, hit subscribe and comment OG John AG right now. It takes 2 seconds and it tells the algorithm who is really riding with us. Also, I built a WhatsApp channel for daily updates and instant voice notes when the export bans hit like this. The link is in the description. Join it because the market does not wait for me to upload a 30-minute video. So let's dive into the meat of this because we have to talk about the mechanism. Most people hear export controls and they think it just means higher taxes. No, this is about flow. China processes a massive chunk of the world's silver. They are the refinery of the world. Silver goes in as concentrate, and it used to come out as bars for the global market. Now silver goes in, and it stays in. It stays in to build solar panels. It stays in to build EV batteries. It stays in to build missiles. This is the Roach Motel theory of economics. The silver checks in, but it doesn't check out. And the reason this is terrifying for the COMEX is that the COMEX relies on global liquidity to keep the price down. The banks rely on being able to move metal from London to Shanghai to New York to balance the books. When you put a gate on the biggest producer and consumer in the market, you break the balancing mechanism. You create an airlock. And inside that airlock, the pressure is building to explosive levels. The airlock is now sealed. Think about the timing. This isn't happening in a vacuum. This is happening right after we saw the $14 spread open up. We saw silver trading at $70 in New York and $84 in China. The arbitrage traders were salivating. They thought they could buy New York and sell Shanghai and pocket the difference. But the export controls just slammed the door on that trade. You can buy New York, sure, but good luck getting it into Shanghai and getting your money back out. The spread is now structural. It is a permanent feature of a broken market. But that's not the scary part. The scary part is what this does to the industrial buyers in the West. Picture a procurement manager at a massive electronics firm in California. For 20 years, his job was easy. He just clicked a button and the silver arrived. He ran just-in-time inventory. He kept 3 days of silver on the shelf because he trusted the market. Today he is looking at a memo that says his main supplier in China needs a government license to ship his next order, and the license takes 45 days to process, and there is no guarantee it gets approved. That manager is panic buying right now. He is not looking at the price. He doesn't care if silver is $80 or $90 or $100. He cares that his factory stops in 3 days if the metal doesn't show up. He is shifting from just in time to just in case. He is calling dealers in London. He is calling refineries in Mexico. He is bidding up the physical premium everywhere else because the Chinese supply is offline. This is how you get a super spike. You don't get it from speculators. You get it from terrified industrial managers who are fighting for their jobs. This manager represents thousands of companies, from medical device makers to defense contractors. They all assumed the global market was one big pool. China just told them, no, there are 2 pools, ours and yours is drying up. The realization hasn't hit the stock market yet, but it has hit the procurement offices, and those phone calls are happening right now. They are frantic, they are desperate, and they are bidding up the physical price behind the scenes. Let's talk about the dual circulation strategy because nobody in the West talks about this enough. It is the official economic policy of China. It means they want to rely on domestic consumption and domestic supply chains. They want to be self-sufficient. Silver fits perfectly into this. They need the silver for their own solar revolution. They installed more solar capacity last year than the rest of the world combined. Do you think they want to export the silver they need to keep the lights on? No. They want to keep every ounce. The dual-use designation is the legal weapon they used. By labeling silver as a dual-use metal, meaning it has both civilian and military applications, they gave themselves the legal right to block any shipment in the name of national security. It is the ultimate trump card. If the price goes too high, they halt exports. If the U.S. puts tariffs on EVs, they halt exports. If a diplomat says something they don't like, they halt exports. Silver is now a diplomatic lever. It is a hostage, and you do not want to be short a hostage. And let's look at the solar singularity. We keep talking about solar, but I don't think people grasp the scale. We are moving to type N solar cells. These are more efficient, but they use significantly more silver. The industry is trying to thrift, they are trying to use copper, but they can't switch fast enough. The demand is parabolic. And where are 80% of these panels made? China. So China has a choice. Export the raw silver to competitors, or keep the silver, make the panels, and sell the finished product at a massive markup. Which would you do? You would keep the silver. That is exactly what they are doing. This destroys the Western manufacturing renaissance before it even starts. The US wants to build its own solar factories. Europe wants to build its own solar factories. But you can't build a solar factory if you can't get the silver paste. And if China controls the refining and the export licensing, they can starve those new factories. They can ensure that the only solar panels that get built are built in China. This is economic warfare played with commodities, and silver is the bullet. Now let's go deeper into the trap I keep warning you about. The paper price is going to try to ignore this. The banks are going to try to smash the futures price to paint a picture of calm. They want you to look at the chart and say, oh, silver is down today, everything is fine. That is the trap. The paper price is a lie. It is a price for a contract that cannot be fulfilled. While the paper price dips the real physical price, the price to actually get metal into your hand is ripping higher. We are seeing a bifurcation, a decoupling. We have seen this before in other markets. Look at palladium a few years ago. Look at nickel. When the physical flow stops, the paper market disconnects. It trades in a fantasy land for a few weeks, and then it snaps. It snaps violently upward to meet reality. We are in the fantasy phase right now. The export controls are live. The metal is locked. But the COMEX is still trading like it's 2019. This is the opportunity. This is the window where you can still buy silver at the paper price before the physical reality flattens the shorts. Let's talk about the whitelist. Only 44 firms. In a country the size of China, that is nothing. It is a choke point. And who are these firms? They are state-owned enterprises. They are entities that take orders from Beijing. Do you think they're going to prioritize selling silver to JP Morgan to help them cover a short position? No. They are going to hoard it. They are going to build strategic stockpiles. This is soft nationalization. They didn't have to confiscate your silver. They just made it illegal for you to sell it to anyone but them. And why are they doing this now? Because they know what is coming. They know the dollar is shaking. They know the debt spiral is terminal. They are converting their trade surplus into hard assets. They are taking the dollars they get from selling us plastic toys, and they are buying mines and mineral rights, and then they are closing the gates. They are building a fortress economy. A fortress needs walls. The export control is the wall, but that's not the scary part. The scary part is the inventory data from the Shanghai Gold Exchange. It has been draining for months. The visible stocks are plummeting, and people said, oh, it's just moving to the west. No, it wasn't. It was moving into private hands. It was moving into military stockpiles. It was disappearing. The export ban is the confirmation that the drain is real. You don't lock the door if the vault is full. You lock the door when the vault is getting empty and you need to keep every last ounce. We have to discuss the Belt and Road angle. China has spent a decade building infrastructure in Africa and South America. They built ports in Peru. They built roads in Mexico. Why? To secure the flow of raw materials. Now those materials, silver concentrate, copper ore, are flowing directly to China. They bypass the London Metal Exchange. They bypass the COMEX. They go straight to Chinese refineries. And once they enter the Chinese refinery system, the new export rules trap them there. The West is losing access to the raw material at the source. Imagine being a miner in Peru. A Chinese company owns the port you ship from. A Chinese company funded your expansion. A Chinese company is offering you a long-term contract at a premium to the COMEX price. Who do you sell to? You sell to China. The metal never even touches the Western market. The COMEX is pricing a ghost. It is pricing metal that isn't there anymore. Now I know some of you are thinking, John, the banks will just smash it. They will try. They are trying right now. They are printing paper contracts to flood the market. But remember the rule. Paper cannot fix a physical shortage. If Apple needs silver for an iPhone, they cannot use a COMEX contract. They need metal. When the export ban bites, the banks will lose control of the physical premium. The spot price might be $75, but the premium to buy a bar will be $40. The spread will blow out, and eventually the paper market will break. It will declare force majeure. It will settle in cash, and the people holding paper will get checks, while the people holding metal will get rich. This is why I scream about physical ownership. If you own an ETF, you own a trust that owns metal in a vault that is overseen by a custodian that is regulated by the same people who are losing this war. If China locks down supply and the physical market seizes up, do you think your ETF is going to be able to source metal? Or will they just change the prospectus to say they track a basket of silver-related instruments? You have to read the fine print. The fine print says they can screw you. Let's look at the dealer panic scenario. We need to talk about what happens on Main Street. When this news fully digests, your local coin shop is going to get a phone call from their wholesaler. The wholesaler will say, hey, shipments are delayed, premiums are up $3. The shop owner has to raise his price. He hangs a sign on the door. Silver Eagles, call for price. Then the phone starts ringing. Customers want to buy, but he can't replace his inventory, so he stops selling, he hoards his own stock. Liquidity dries up at the retail level. We saw this in 2020. We saw this in 2023. But this time is different. This time the blockage isn't a virus or a bank run. It is a geopolitical wall. Walls don't disappear in 2 weeks. This shortage could last for years. Imagine a world where you simply cannot walk into a shop and buy a 100-ounce bar. It doesn't exist. That is the world we are heading toward. But that's not the scary part. The scary part is what happens to the silver miners outside of China. Mexico, Peru, Chile, they are now the only game in town for the West. And do you think they are going to keep selling their silver cheap? No. They are going to see what China is doing, and they are going to want a piece of the action. We are already seeing resource nationalism in South America. Mexico is talking about nationalizing lithium. Silver is next. If the supply form China hits zero, the pressure on Mexican mines becomes infinite. They will raise taxes. They will demand royalties. The cost of production will skyrocket. We are watching the balkanization of the silver market. One price for China, one price for the West, one price for friends, one price for enemies. This destroys the liquidity of the global market. It makes the COMEX irrelevant. The COMEX assumes a global, fungible pool of metal. That pool just evaporated. The COMEX is now pricing a pool of metal that sits in New York and London and is rapidly draining. Think about the warehouse receipts we track. The registered category at the COMEX is already at historic lows. Now imagine what happens when the inflow from Asia stops. The drain accelerates. We could see the COMEX registered inventory hit zero, effectively in months, not years, months. When that number hits zero, the game is over. The emperor has no clothes, the shorts have no metal. And don't forget the retail panic. Right now, the average guy on the street doesn't know about export licenses. He doesn't know about dual-use lists. He just sees the price moving. But when he goes to the coin shop and the dealer says, sorry, I can't get eagles because the mint is short on planches because the supply chain is broken, that is when the panic hits. The dealer shortage is the canary in the coal mine. We are already hearing reports of delays. We are hearing reports of high premiums on junk silver. That is the early tremor. This export halt is the earthquake. The tsunami hasn't hit the shore yet. It is traveling under the ocean. The tsunami is the supply shock that hits in 60 to 90 days. That is how long the current inventory buffer will last. Once that buffer is chewed through, we are in uncharted waters. We are in a world where you have to beg for product. So what do? You stop waiting for a dip. The dip is a lie. The dip is paper manipulation. You use the dip to grab whatever physical metal you can find before the dry up hits your local shop. You look at the $14 gap, and you realize that $14 is the discount you are getting today. You are buying at the paper discount. You are exploiting the broken system before it fixes itself. And let's zoom out to the macro connection, because this fits the bigger picture perfectly. The BRICS nations are building a commodities-backed currency system. They are accumulating gold. They are accumulating silver. They are accumulating oil. They are telling the West, you can keep your debt, we will keep the stuff. The export ban on silver is just one move on that chessboard. It is China saying, we value this metal more than your dollars. This is the end of the dollar's exorbitant privilege. For decades, we printed paper and bought real stuff. Now the people with the real stuff are saying, no thanks, we'll keep it. That causes inflation in the West. It causes shortages. It causes a standard of living collapse. Silver is your life raft. It is the only asset that is both money and stuff. It straddles the line. The banks know this. Look at the data. The banks are net long now. They flipped. They saw the export controls coming. They have better intel than we do. They stopped shorting and started accumulating. The only people still short are the hedge funds who trade algorithms and the retail investors who think the chart is the territory. Do not be on the side of the algo. Be on the side of the insider. The insider is hoarding. But that's not the scary part. The scary part is the enforcement. China has set up a system where penalties for smuggling are severe. They are not playing around. They have drones monitoring borders. They have port scanners. This is a watertight seal. So don't expect a black market to save the supply. The leakage will be minimal. The shortage will be absolute. We are also seeing signs that other nations might follow. If China locks down, Silver India might lock down silver to protect its own solar industry. India is investing billions in solar. They cannot afford to export silver either. If India and China both close the gates, that is 50% of the world's physical demand going dark, the remaining market becomes a squeeze chamber. So here is the doom and glory close. The doom is for the manufacturers who didn't hedge. The doom is for the shorts who are trapped in a contract they cannot settle. The doom is for the dollar, which buys less and less metal every day. The glory is for the stackers. The glory is for the people who bought when it was boring. The glory is for you. You saw this coming? We talked about it. We watched the inventory drain. We watched the premiums. We watched the geopolitical tension. And now it is official. The gate is closed. The metal is nationalized. The price is about to realize that it has no ceiling. The next move won't be polite. It won't be a gradual drift to $100. It will be a gap, a limit up open, a market halt, a call for prices notice on every dealer website. We are moving into the phase of unavailability. The price is irrelevant if you can't buy it. I want you to check your stack tonight. Hold it in your hand. Feel the weight. That weight is wealth that cannot be canceled by a Chinese bureaucrat or a Federal Reserve chairman. It is yours, and it just became significantly more precious. Do not sell into the first spike. The first spike is just the paper market realizing it made a mistake. The real move comes when the industrial panic sets in. That is the super spike. Wait for the panic. Ride the panic. And then, and only then, do you consider swapping for other undervalued assets. We are in the end game of the paper silver market. The physical market has declared independence. China just signed the declaration. I'm John O.G. Comment OG, John O.G. if you are holding strong. Fight the fakes, secure your stack, and I'll see you in the next one.